So in terms of the scale of investment, I would go back to sort of the two trajectories that we model for our clients. So the first being the business as usual current policies trajectory, which does not meet the net zero 2050 target. Even under that scenario, we see very significant investment. So 50 gigawatts of investment by 2050 in large-scale renewables, in addition to the rooftop solar deployment, which is in the tens of gigawatts on top of that, and that totaling around 80 billion Australian dollars of investment. So it's very, very significant, and that's without even meeting a net zero 2050 target. That's more like a 4-degree scenario. If we move to a 2-degree consistent scenario or a 1.5 degree consistent scenario, a net zero scenario, then you're looking at 80 to 150% increase in investment on top of those numbers, just to meet the increase in demand for electricity. Now, on top of that, the investment required to decarbonise the other sectors is very significant also. Yeah, and then in terms of who delivers that scale of investment, I mean, that is still open to question really as to what parties can deliver that scale of investment. I guess naturally my mind turns to superannuation funds, pension funds, because there's a high level of savings from everyday Australians in pension funds, and the pension funds have become more active in the sector, interestingly, in the last 2 to 3 years, and there is quite a bit of portfolio consolidation happening with the pension funds playing a pretty key role, taking on long-term renewable risk, more merchant risk. I think the market in Australia is quite competitive already, so we're not missing any category of investor. I would say we've got private equity, we've got infra funds, we've got pension funds, and now we've got government much more heavily involved. I think the sector is probably now looking to government to start to take the lead, just given the scale of investment and given that the signals for that scale of investment simply will not be there. And what we've seen to date is that the state governments are starting to step up. So they're looking at running renewable auctions, they're looking at underwriting new capacity, they're supporting new storage and getting new business models over the line for storage. And so I think we've probably got a period of time now for the government to sort of set the framework for that next stage in transition. So for the incumbent utilities, they have, of course, been very key to the first wave of renewable investment. In terms of meeting the 2020 target, they had the obligations placed on them to source renewable energy under the LRET mechanism, but they have not been as active in terms of investment in renewables for the past 5 years. It's really been institutional investors, both domestic and overseas, that have been dominating the investment landscape. I think the utilities are still have their customer base, and so they're starting to look at offtake rather than investment. So rather than building their own volumes, they're providing offtake services, and they're focusing more heavily on dispatchable capacity and firming, providing that firming access to the market. And no doubt there'll be more competition for the utilities to provide that service going forward. And for large customers, clearly there is a big push in Australia for corporate PPAs. We have seen a very strong wave of corporate PPAs really for the last 4 or 5 years. And we've gone through the very large off-takers like telcos, the water companies, and we're into the medium-scale corporates that are now coming to market and looking for renewables. So I would say it's quite a mature market, and the corporates are now quite price sensitive or quite sophisticated in terms of the prices they're pushing in the market for their renewables. There's not a great evidence of a green premium or paying above the market value. But I think that will change with the net zero commitments that corporates are taking on. So that links back to the green value argument. I think once a corporate takes on that stretch target to hit 2050 and therefore a stretch target for 2030, then they may well have a higher willingness to pay, and that could translate into green value. So I think corporates will be important, but more as an off-taker. I think we'll start to see more demand being met by renewables and contracted directly through PPAs.